Hi, everyone. This is Kelly Holland, the Vice President of Operations here at the CIP Group. On behalf of Jim McSweeney and all the staff here at CIP, we'd like to thank you for joining us today for our HR Update webinar for the Mass Paid Family Medical Leave Act, FLSA updates, and the 10 traps for the unwary employer. Today's webinar will be presented by Dave Wilson from Hirsch Roberts Weinstein. I'll be monitoring questions that are entered into the chat, and we'll attempt to address all the questions throughout the webinar. So now I'd like to turn this over to Dave for today's presentation.
Thanks very much, Kelly, and good afternoon, everybody. Today we're going to go over the mass paid family leave. I doubt that it should be news to folks. There's a quick FLSA update that I want to touch on, and then we'll go through some of the traps that we see at HRW, the kinds of mistakes that employers are often making, and hopefully you're not making them. And then we'll leave some time for questions as well. So let's get right to it. So first, let's see if I can advance the slide here. Kelly, maybe you can advance that slide, the first one. There we go. Okay, so I think I just covered that agenda, so let's go on to the next slide. So paid family leave, if you look at this, it's essentially an insurance program, right? Or like unemployment or short-term disability. So the whole idea behind paid family leave is we're going to take contributions from the employer and the employee. They're going to go into a trust fund, and that trust fund has got basically about 14 months to fill up, and then they hope to have enough money so that once people start going out for either to take care of themselves, a family member, or after the birth or adoption of a child, they will get some wage replacement. And when you think about this law, it's really designed to protect folks at the low end. I mean, the highest wage replacement anybody's going to get is about $850 in a week. Next slide, please. So when you look at the law, it's following the standard of if you qualify for unemployment, generally you will be eligible for paid family leave. But what's different about it is it has some broader rules and qualifications than under the federal FMLA. So if you're an employer of 50 or more, you're probably familiar with the FMLA. But here it's 12 paid weeks of family leave, but up to 20 weeks of paid medical leave. And there's a 26-week cap for the whole year. Again, as I said, it's only partial wage replacement, but it is job protected leave. So under the federal law, the FMLA is unpaid job protected leave. This under state law is going to be some paid job protected leave. Next slide, please. So if we look at the timeline here, hopefully you've gotten your workplace poster up and that you've sent out your notice to employees. And remember, on the notice, you want some proof that you've given notice. So a lot of employers actually had employees sign those documents, and they have the signed documents. So if there's ever a concern that you gave notice, that'll be your get out of jail free card. Contributions will begin being collected by October 1st. This delay helped the payroll companies and employers figure out and get the timing down on that. If you want to apply for an exemption, the deadline is coming up December 20th. I'll tell you, having looked at most of what a good deal this is from a cost standpoint, I would be surprised if anybody is going to find that it's less expensive to do a private plan. And then again, the benefits are not going to start until a year from this January, and that will be for birth and adoption of a child and your own health conditions, and then care for other family members begins July 21st. Next slide, please. So to be eligible, the eligibility is relatively low. You have to show that in the last 4 completed calendar quarters that you earned at least 30 times the weekly benefit, or which presently the minimum earning requirement is that you earn $4,700 in the past 4 quarters. So that is a very low bar at this point. Next slide. And one of the things that, another reason I think your private plan may not be the way to go is that in order to be exempt from the paid family leave, you have to offer as good or better a deal. And one of the things that paid family leave does, it covers former employees who have been separated from employment for up to 26 weeks. So imagine you have a former employee and that you would have to pay for them, pay either their health or other benefits. And most employers don't want to have a plan that does that. There's some of you that are self-employed out there that have to decide if you're going to opt into the plan or not. And again, it's a relatively good deal, but that's ultimately your call. And remember that if you employ more than 50% of your workforce as independent contractors, then they're going to be eligible through you as well. So now let's look, next slide, let's look at the how the dollars actually break down. So 80% of the wages is up to 50% of the state average weekly wage, and then it's 50% beyond that. But the bottom line to remember is that the current maximum that anybody is ever going to get is $850 a week. And let's look at how that number is calculated on the next slide. So if you make $26,000 a year, then your weekly wage would be about $400. Your total benefit would be, but that would be 80% of what you normally make. But look, as your pay goes up, the percentage of what you would get weekly goes down by quite a bit. So $850 is the cap, and so anybody who's making more than $1,284.96 a week, you'll see that the percentage drops dramatically. So if you make $104,000 a year, all of a sudden, this is only replacing 42% of your weekly pay. So again, as I said, remember that this law is really designed as a safety net, especially for those at the lower end. So let's talk about some of the qualifying purposes on the next slide. So the definition of what is a qualifying purpose for medical leave is broader than what we see in the FMLA. So it's an illness, injury, impairment of a physical or medical condition that either involves inpatient care or continuing treatment by a healthcare provider. Now, continuing treatment is a fairly low bar. And then let's look at the issue of, for family leave on the next slide. It's 12 weeks of family leave is available to bond with the child in the first 12 months, to care for a family member with a serious health condition, or to care for a family member who has been a service member who has suffered in active duty. Now, who's a covered family member? Let's look at the next slide. If you see under the Family Medical Leave Act, the first three, spouse, child, and parent, in black lettering, those are what the federal law they're considered family members. However, under the new Mass state law, there's even a broader group that you can take time off to care for. So parent-in-laws, grandchild, grandparent, sibling, and domestic partner. And those weren't covered previously under the federal law. So especially you HR folks, keep that in mind when people come to you and they want to care for people in this broader group. And even though under the FMLA you could have said no, you won't be able to say that under the state law. Now, how do we measure the leave year? Well, under the old law, you used to have a 12-month look back from when the person asked for the time off. Now, everybody's going to want to change their FMLA policy, but not until we get to a year from now, January 2021, when this starts to kick in, because we're going to want to have the two laws run concurrently with each other. So now, for example, if I decide that I need to go out on a leave, and today is Thursday, August 8th, you would look back to the Sunday before or August 4th, and that would be the beginning of my leave period. And then we would measure that forward until, and I could use up to 26 weeks of different types of leave up until August 7th of 2020. That's the way the measurement's going to go for now. It's not going to be a calendar year. It's not going to be a look back. This is the way that everybody's going to need to do it. Next slide. A few other details about paid family leave. So intermittent leave will be available on a prorated basis. There's an automatic 7-day waiting period for everything but pregnancy-related disabilities. So if I am going to go out, I'm not going to be eligible during that first week for any paid family leave. Now, employees will be able to use their sick leave time or vacation or PTO if they qualify. They're not required to, but they may be able to. And we already talked about the written notice and the posting requirements for the employer, and there are a lot of penalties for not complying with that. So we want to make sure in everybody's orientation package that we give them notice and we get them to sign those, and HR or somebody holds on to those, because those are our get out of jail free card. And the last thing is that employees, if they know if it's a planned time off, they're required to give at least 30 days notice, and that's important in some situations. It's not practical in others. For example, if somebody gets in an accident, they're not going to know 30 days before that was going to happen. All right, next slide. So I talked a little bit about before about coordinating with your other policies, and again, the paid leave is provided at the same or a higher rate, but it accounts against an employee's leave allotment. So, for example, we have situations where if you're going to pay somebody to be out because you have some paid, well, for example, you have PTO. You cannot have a policy that says you have to use your PTO first before you can use paid leave. Now, the employee can choose to use that PTO, especially in those first 7 days when they're not allowed to use paid leave. And also, the paid leave will run at the same time as the FMLA leave and the mass parental leave. Now, one interesting thing that hasn't been figured out, and I think they're still working on it at the DFML, is what about the law provides reimbursement from the trust fund if an employer pays the employee instead pursuant to a company policy. The one thing that's not clear is how an employer gets that reimbursement yet, but we're told by the DFML that is something in the works and that will be figured out. Next slide. Remember that this is job protected leave, and that we also have to continue an employee's health care while they are out on the paid leave. And a couple of things that we're supposed to restore them to their previous position or an equivalent position, which is similar to the FMLA. We have to continue their health care, although like the FMLA, we can ask them to make their contribution. But here's a section about any retaliation. So if somebody goes on paid family leave, we can't penalize them for doing that. And what's interesting is once they return from family leave, what the law says is any negative change in their terms or conditions of employment. So you move me to a worse shift, you cut my pay, you give me a more difficult job, that's done within 6 months of me taking that leave is presumed to be retaliation. And that presumption has to be overcome by clear and convincing evidence that I was doing it for another reason, or that would have occurred anyway, regardless of whether I had taken the leave. Next slide. All right, so who's paying for this? Well, the contribution rate went from 0.63 to 0.75 because of the delay in implementing it. But again, the premium's going to be split. The employer is going to pay 60% of the medical, and the employee 40%, and the employee is going to pay all of the family leave. Now, that's what the law requires. A generous employer can decide that they're going to pay everything, and that's fine. And employers with less than 25 employees don't have to pay any of it. In effect, larger employers are going to subsidize the smaller employers for their share. The employee portion will still be taken through wage deduction. And then independent contractors, they count as employees if they make up more than 50% of your workforce. All right, next slide. So what does this look like? So if you have 25 or more employees, there'll be a total contribution amount. On the medical, it breaks down that the employer share is going to be 60%, and the covered individual share is going to be 40%. And then over on the family leave side, the employer share is going to be 0%, and the covered individual share is going to be 100%. Now, if you look at this chart, and this was for an employer with less than 25 employees, the breakdown would be the employer share for medical leave would be 0%. The employee's covered individual share would be 40%. And on the family leave side, employer share would be 0%, and the covered individuals would be 100%. All right, let's go to the next slide. So on the notice requirements, hopefully you got your notices out. If you didn't, talk to Kelly afterwards, and she'll be able to help you with that. And those notices had to be provided both to employees and to your 1099 folks. For your existing workers, you could do it electronically, but you wanted some way to get acknowledgement or receipt of that. And so you have to be able to prove that they actually got it. Next slide. So that is the quick overview on the PFML. I urge everybody to go look at the website. It's actually very good, and there are most of the questions are answered. They have an FAQ. They keep updating it. I would encourage you to sign up for their newsletter. So whenever they post a big change, that is put up there. Give an example of a change that they recently gave us notice on. Before, they were saying that employers were supposed to pay the withholdings based on the services performed in that quarter. And that created some confusion, because if the quarter is October, November, and December, and I perform services in late September, but they actually don't, I don't get paid for them until October, that was creating some confusion, because then at the end of December, I'm performing services, but getting paid for them in January. So they heard the employer's concerns about this issue, and they changed it to now say that you'll do the withholding for the amounts that are paid during that quarter. So I get a paycheck on October 3rd, and even though some of those services are performed in September, the withholding will be for that amount. And so that's going to make it much easier for employers. And that's just an example of the kinds of things they're learning and updating on the system. Okay, let's go to the next quick topic I want to talk about, which is the Fair Labor Standards Act updates. Now, many of you remember that President Obama wanted to raise the what we call the salary level test from $455 a week, $455 a week, up to $917 a week, and that looked like it was going through. And then President Trump was elected, and he put a stop to that. But now there are regulations out there to suggest that he may bring it up from 455 to a higher number. So let's next slide. Let's just recap again what it means to be exempt versus non-exempt. So, well, when we say exempt, you're exempt from paying overtime, or you're not overtime eligible, whereas non-exempt employees are eligible for overtime for working more than 40 hours in a week. And in some states, they actually have daily overtime, like in California, so after 8 hours. But in most states, it's 40 hours in the week. And you can be exempt if you fall into what we call the white-collar exemptions. You're either an executive, administrative, a professional, an outside salesperson, or one not on this list is a computer person, where you're doing actually programming or the like. Now, remember that a job title alone is insufficient to establish the exempt status of an employee, and the fact that an employee is paid a salary rather than an hourly rate in and of itself does not relieve the employer of the duty to pay overtime. So think of it, there are three parts to the test. First, right now, there's the salary level test, and that says you have to pay me at least $455 a week. Second is the fact that you pay me a salary every week of the same amount, regardless of the quality or quantity of work I perform. So I may work 60 hours in that week, I may work 30 hours in that week. You're still going to pay me my set salary of $800 an hour a week. And then finally, in addition to those two tests, there is the test called the duties test. So you're looking at what duties I perform, and they have to be fall into what we call the exempt duties. So let's go to the next slide. So what proposal has Donald Trump's administration come forward with? Well, they proposed that we're going to raise the salary level test from $455 a week to $679 a week. And that's the difference between somebody making $24,000 a year, roughly, now to $35,000. There also is an exemption for people that are what we call highly compensated employees. And if they are making more than $100,000 a year, there's a presumption that they could be exempt. And that number is going to go from 100,000 to 147. And the DOL has not touched the duties test, so it's still those white collar exemptions. Now, these regulations have been out. They're getting review and comment back, but we think there's a fairly good chance that they are going to get approved. So so what does that mean for you? Let's go to the next slide. So for you as an employer, I think what you want to do is review, again, who you're calling exempt and non-exempt, and look at your exempt folks. And if you're paying any of them between $455 and $679, you're either going to want to bring them up with a raise or turn them into non-exempt employees and make sure you're tracking all their hours. Now, here in Massachusetts, you are required to track hours of all your employees, whether they're exempt or not. Many employers don't know that and don't do that. And usually it's not a big deal until there's a wage and hour claim against you and the Attorney General's office comes and you have no record of what your folks are making. So that's an issue we want to flag for you. So go back and look at your payroll, look at your salaried folks, and if you have anybody that you're paying between $455 and $679 a week, if this law passes, you're going to need to revisit whether you either need to bring them up to at least $679 or potentially move them to a non-exempt status. All right, that is all I have to say about that subject at this point. Let's talk about 10 tips for managing. And these are things that we see over and over as a law firm that only represents companies and spend a lot of time doing manager training. Mistakes we see managers make. So one is that supervisors often fail to get help, either from fellow supervisors or their own supervisor, and they decide to make the decision on their own, and it's sometimes not a good choice. So we have a saying here in the office: 1 + 1 = 3, and that's really when you get one manager going to another one and getting advice on an idea where maybe they're not so invested, and that other supervisor or manager gives them advice, and instead of 1 + 1 = 2, it actually comes out better. The other thing is mistakes that we see are managers acting in haste. You know, the old people firing people on the spot, or being goaded into firing somebody, as opposed to just sending that person home, investigating, consulting with others, documenting your decision, and then moving forward from there. You know, the power that you have as a manager or supervisor is that you can always send somebody home, right? And here's how this scenario would go. Dave, you need to leave. Oh, are you firing me? No, I'm just asking you to go home now. Well, are you putting me out on administrative leave? You know, I haven't decided. All I know is you just need to leave right now. Is my time going to be paid or unpaid while I'm out? You know, Dave, I haven't decided that, but you just need to go right now, right? And that's the power that you have as a manager, is just to send that person home. And then you can figure out, is it a suspension? Is it paid, unpaid? but that's, so when we talked about acting in haste and litigating in leisure, we've seen situations where people have just responded, oh, go ahead and fire me then. All right, you're fired. And then the manager not realizing the whole story, or that other people have done the same thing and not been fired for that, things like that. Another mistake we see, number 8, keep your manager hat on at all times. So it doesn't matter if it's 6 o'clock in the morning and you're having coffee, if it's lunchtime and you're out with your colleagues, or if you're out at the local speakeasy in the evening, and even after your 7th drink, you're still the manager. So that never changes. And so it doesn't matter what time of day it is or where you are, you always have your manager's hat on. So do not forget that. Number 7, another mistake we see is that people make exceptions and then they start to become rules. Often employers worry about setting a precedent. They want to do something, or they're worried about setting a precedent. What I say is most situations are unique. And so if you document the reasons you're doing it and what makes it unique, then I think you can do that. But, being careful about making an exception and then having that become the rule, because you made the exception for the good employee, and then all the employees who are trying to game the system then try to drive a truck through that exception. Remember that nothing is ever off the record. You can't unring the bell once you've heard something, once you know about it. So when people tell you, that's for newspapers and when you're working with journalists, but there's nothing that is off the record. All right, let's go to number 5. Our tips for managers. We see managers get in trouble sometimes in situations where employees come to them with a problem, and the managers, they're not sure what to do, or they don't want to act precipitously, so they sit on it. But if they procrastinate, that leads the employee to feel like their manager doesn't have any power. And so being careful to not act precipitously, but also don't procrastinate to the point where you never respond. Number 4, don't make promises you can't keep. And we see this a lot in situations where, say you're my manager, I come to you and I say, Jane, I want to share something with you, but I really want to keep it just between the two of us. And so you say, okay, I will. And then I say, I'm being sexually harassed by Joe. And you've now promised that you are not going to tell anybody that, but I don't want you to tell anybody that. I'm going to try to handle it myself, right? So remember, as a manager or supervisor, you are considered the company under the law. And once you know about it, you and the company have a duty to investigate and take appropriate corrective action. So the better response in that situation is, hey, Jane, I want to share something with you and just keep it between the two of us, is, well, Dave, I do too, but depending on what you tell me, I may have a duty to act. So let's talk about it and let's figure out what makes sense. Number 3, honesty is the best policy. Again, your direct reports are always watching you. And if you're not being honest, they'll know it. And it reflects poorly on you and also on the group. Number 2, bad news should never be a surprise. I'm often shocked how often an employee is a poor performer. They call up, the employer calls up and wants to fire them. And I ask, so is this going to be a surprise to the employee? And oftentimes the employer will respond honestly and say, yeah. And that should never happen, because employees, if we're being fair to our employees, we're giving them notice of the problem and a chance to improve. And if it's news to them, then it's probably because we haven't done our job correctly. And that ties in with the whole idea is not only do you tell the employee, but you tell them in writing. So we have a saying, if you don't write it down, it never happened. And finally, the number one top tip for managers, next slide please, is treating people with dignity and respect. That's what makes the greatest difference just in treatment. And I'll say this, it's not on my list here, but if an employee sees you as their mentor, in other words, somebody who cares about their career, they're never going to sue you, right? Because if you're riding them for being late or not doing the job properly, they know that you're riding them because you care about them and you care about their career. And we don't see people bring discrimination and harassment complaints against their mentors. All right, so that's off my soapbox about managers. Let's talk about some of the traps we see for the unwary employer. And here we have true-false questions, and we're going to ask you to respond to these in that fashion. So, number one, it's okay to utilize a time clock and a payroll system that rounds the employee's start and finish times. Example, if you punch in at 8:58, it rounds it up to 9 o'clock. So click on an answer, and then Kelly can show the quick polling results, and then I'll give you what I think is the answer. Okay, so the answer is true. And time clocks, as long as they are used in a way where it all comes out in the watch. So, for example, there's something called the 7-minute rule. And the 7-minute rule says if I arrive at 7 minutes before the hour, it'll round up to 9 o'clock. If I arrive up till 9:07, it'll still round up to 9 o'clock, back to 9 o'clock. And what that means is if the employee is a few minutes later, a few minutes early, it'll bring it to that time. So in the end, it sort of all comes out in the wash. What you can't have is a rounding policy where at 8:53, it rounds me up to 9 o'clock, but at 9:06, it rounds me to 9:15. That would be a policy that is just favoring the employer and not the employee. So if you use time rounding, make sure that you are following a rule that's consistent in either direction. All right, let's look at question number 2. And the question is, comp or compensatory time is an acceptable substitute for overtime so long as the employee agrees to it in writing. All right, I want to ask folks to check on that. All right, and the answer to that question is false. So we don't like comp time for a number of reasons. First off, comp time only is acceptable for exempt employees, and it's never going to be acceptable for non-exempt employees because comp time is used as a way to end run paying overtime. Oh, good. I see the poll answer there. And here's why. Let's say that it's Thursday and you've already worked 4 10-hour days and I'm paying you hourly. And I say, geez, Dave, take a comp day tomorrow where you'd normally come in and work 8 hours, and then you would have had 48 hours and you would get extra overtime. So by using comp time there, I would be end running overtime, and so that's why it's not allowed. Even in situations where there are exempt employees, if you use comp time, you should have a written policy, and it should be very clear about what qualifies and doesn't qualify as comp time. All right, let's move on to the question 3. An employer may lawfully require an employee to work through lunch in an emergency. What do you think? All right, and I think you can argue this one both ways. I actually learned that I went to 3 years of law school to learn that the answer to this question is it depends. In one sense, technically, it's a violation of the meal break law, which says that you have to give me a half-hour unpaid break after 6 consecutive hours of work. And so by making me work through lunch and through that 6th hour or 7th hour, that is, would technically be a violation. However, on the other side is if, depending on the nature of the emergency, you may be required to do that and then get your lunch after that. And I would, as long as that only happened once in a while, I think an employer it would be hard pressed to say the employer's liable for that. But if it was happening on a frequent basis, then I'd be concerned about employer liability in that situation. All right, let's look at question number 4. If Joan works 40 hours a week in her exempt position and occasionally works an hourly position on the weekend, she must be paid overtime for the weekend hours that exceed 40. All right. And let's see how our response to that is. All right, and so what this ties, we got almost a 50-50 split. So here's the way to look at that. The answer is false generally, unless the weekend hourly job becomes Joan's primary job. So let me give you an example. I represent a client, and they make fish finders. And so it's a seasonal business. Everybody wants their fish finder fixed in the spring when they put their boat in the water and realize that it's not, the fish finder's not working. And so this company had somebody that worked their way up through, they were a hands-on person. They were really good at fixing fish finders, and they were so good that they got promoted to be manager of that group. And now they had an exempt job. They were paid a salary. But what happened in March and April is that so many people sent in their fish finders that they really needed his help. So he would work his 8 to 4:30 job as the manager of the group, and then he would go into the shop, and for the next 2 or 3 hours, he would go back to his old job of fixing fish finders. Now, the company could choose not to pay him anything more for that, but there is something in the law called minimum guarantee plus extras, and they could choose to pay him on an hourly basis. But his primary job is that as the manager, and so therefore, in this case, Joan would be okay to work and get paid some straight time version, but there'd be no requirement to pay her overtime because still her primary job is an exempt job. All right, let's go to number 5. As an employer may discipline employees for discussing their salaries if the company handbook states that employee salaries must be kept confidential. Let's see what the feeling is on that. Okay, and The majority say the answer is true. Well, the answer is actually false. If you recall, last July 1st of 2018, the Mass Equal Pay Law was passed. And one of the things that that law made clear is that employees are allowed to discuss their salaries, regardless of what the company policy says. So they can discuss with each other. I'm not suggesting that the HR person can go around and start walking the room saying, and you make this amount, and you make that amount, and you make that amount, because they're not. But what the law makes very clear is that employees cannot be penalized for discussing their own pay with other employees, regardless of what their handbook says. So if you didn't learn anything else today, then I hope that's a helpful tip for you. All right, let's move on to number 6. If a terminated employee fails to return their keys, cell phone, or other company property, the employer may withhold the value of those items from the employee's final paycheck. And you know, those disgruntled employees are trying somehow to gain some power, so they walk out the door and they don't return keys or a cell phone or a laptop or something like that. And so can we just dock that from their final pay? And 41% of you think true, 59% think false. Yeah, the falses have it. So there's the legal and the practical answer here. You cannot withhold their final pay. You certainly couldn't withhold it below the minimum wage. That would be also a federal violation. But often what employers do, so let's say that those withholdings, you've got a check for $1,800 coming, and the withholdings is worth about $600. What sometimes I've suggested employers do is bring the employee in and cut them 2 checks, one for $1,200 and one for $600, and say, hey, look, we really need the the key card and badge back, and it's worth $600 to us. But if you're not willing to do that, you can also endorse this check for $600 back over to us to offset that. What would you like to do? And if the employee says, I want the money, then you sort of have to give them the money. But that is a practical tactic that we've used with some success over the years. All right, let's move on to question 7. An employer may make salary deductions for partial day FMLA absences without threatening an exempt employee's status. And we often get these questions about docking people's pay and when can you legally do it. So let's see how this group is doing on this one. And 33% say true, and they are correct. There are just a few reasons that you can dock a pay. The general rule is that you cannot, if you pay somebody on a salary basis, then they have to receive that predetermined amount of compensation each pay period. Now, there are 7 exceptions to that, to the no pay docking rule. And one of them happens to be the FMLA. And that was actually written right into the rule that when an employee takes unpaid leave under the FMLA, the employer may pay a proportionate part of the full salary for the time actually worked, but they don't have to pay for the time that they are out on FMLA leave. Other ways that you can legally dock somebody's pay, that would be if they miss 1 or more full days for personal reasons other than sickness or disability. 2 would be if they are out for sickness or disability and the employer has a plan or policy So let's say like you have earned sick leave and you've used up your 5 days, and now you're out for a 6th day. You can then dock it as long as it's a full day. There, you can dock folks for you can offset amounts. So you can't dock my pay for being out on jury duty or in the military or things, but you can offset any amounts I earn. So if I'm getting $50 a day for my jury duty, you can offset that. Or if I'm getting paid military pay for outs serving during training, you can offset that. So those are some of the examples. Let's move on to number 8. Accrued but unused vacation is considered wages earned and must be paid by an employer on the day the employer fires the employee. And this is here in the People's Republic of Massachusetts. And that answer is true. Yes, 81% of you are right. This is what we call the final pay rule. And again, this is a rule that came about because often when an employer fired an employee, they were mad at them, and so they would not pay them their final pay. And what would that employee do? They would call the Attorney General's office and yell and scream about how they were getting screwed. And so as a consequence, a law was passed that basically said, on my final day, if I quit, you can pay me the next normal regular payroll. But if you fire me, then you're required to pay me all my final pay that I've earned up to that point, plus any accrued and unused vacation. And your failure to do that can lead to you owing me 3 times the amount you would have owed me plus attorney's fees. So that's a mistake we often see made. All right, let's go to question 9. A supervisor may go into an absent employee's locked company desk if the reason is business related. So I've got my private desk locked, and you want to go into it. All right, and 87% of you think that's true, and I would tend to agree with that. But those of you that said false, I think I'll give you credit if you, depending on what you were thinking on. So the law says that if an employer has a legitimate business reason to go into a locked company desk, then that would be allowed. So let's say, for example, I'm out on vacation and I have the schedule of when everybody is allowed to take vacation. And so while I'm out, 2 employees are arguing about who gets to be out in the following week. And the only way, and you can't reach me, and the only way you can find out the answer is you can go into my locked desk and get that schedule. That would certainly be considered a legitimate business reason to do so. Okay, let's look at question 10. You can be held liable. You can be held personally liable for sexual harassment committed by somebody else in the company. What do you think? You're just the innocent supervisor bystander watching this happen, but you haven't actually committed anything. And 70% of you say true, and you would be correct. Remember, as a supervisor or a manager, under the law, you are considered the company. So when you know about it, it's considered that the company knows about it, regardless of whether you told them about it or not. And so that's one that sometimes surprises folks. Now let's go to our bonus question. You cannot require employees to speak only English while on the job unless it is job related. Oh, and look at that. 100% of you say true, and c'est vrai, verdad, true is the answer. Yes, that's correct. And, you know, it's interesting over time, I've seen more and more acceptance of this as we've become more diverse and more languages are spoken in the workplace. So, all right, so how did you do on this quiz? Next slide. Next slide, please. So 10 correct. You get to be Karen Brosnahan for 1 week while not only she takes vacation, but she's actually retiring. If you got 7 or more right, then you're almost there, almost ready. 4 to 6, you could have guessed and gotten that many right. And 3 or less, you probably want to put your assets in somebody else's name because either you're about to get sued or you may need to engage a lawyer. Okay, so last slide, if we can get to it, is we have a saying in the office, and I'm not seeing any more slides after this polling question. So, but the point I was going to make is we have a saying in the office, and if you don't remember anything else I told you today at this webinar, remember this: if you don't write it down, it never happened. So you as a supervisor and an owner, you can do all the right things, but if you don't document it, later the employee is just going to deny that any of that occurred. All right, so we do have, I've been talking a lot. We do have a little time for a few questions. Kelly, did you have any questions?
Yeah, there's some questions out here. So these are, I think, in regards to the Paid Family Medical Leave Act.
Okay.
The first one is, if you don't have more than 50% 1099, do you still have to give the notices to the 1099?
Interesting point. The DFML would like you to do that because they're trying to figure out ways to get the notice out to them. And so I would encourage you to do it if you could, but you're not going to be required to, if they're not more than 50%, you're not going to be held liable if you don't.
The next question is, can you clarify the date that the notices should be sent to or given to employees? There is a date of September 30th on the website.
Oh, yeah, you're right. I misspoke in that originally it was supposed to be by July 1st. Now you have until September 30th to get those notices out. Thank you for catching me on that.
Okay. All right. There's a question, are there sample notices to give to employees for the paid family and medical leave, and what exactly needs to be outlined in that notice?
Well, those notices, you can download those right off the website. And if you are going to follow the law on those notices, you're just going to say, you're going to put in, you're going to pay 60% of the medical and 0% of the family. And the employee is going to pay 40% of the medical and 100% of the family.
And the next question is, can we include the notice in the employee handbook and get an acknowledgement that way?
You could. I wouldn't advise it. I don't think it's the best practice, because I think what you're going to, a lot of employees are going to say, I never read the handbook, or I just signed that I received it, but that doesn't mean I read it all. I encourage employers actually to print these out, have a meeting with their employees, explain what's happening, and then have them sign the forms and take them in right then.
Are employees who live outside the state of Massachusetts eligible for the PFML?
Great question. They are if they are paying into the mass unemployment, if we're taking state unemployment funds from them as tax, SUTA, S-U-T-A, then they could be. What the law says is if they're performing services in the Commonwealth, so sometimes you have remote employees and the office they report to is here, and so in those cases, there's a pretty good argument that the answer is yes, but otherwise, if they're paying into their own state's unemployment, then the answer would be no.
All right, the next question is, does the Family Leave Act pertain to H-1B employees?
Yes. If they're an employee of yours and on your payroll, and they've been employed for at least a year, and they've worked at least 1,250 hours in the last year, then they are going to be eligible, whether they are on a H-1B visa or not.
If an employee works less than 40 hours per week, can they still be exempt, salaried employee, and not paid overtime? Consistent work schedule, but they make less than $679 a week because they are part-time.
Ooh, that's a great question. You know what? I'll have to, Kelly, figure out who asked that, and I will get back to you. I think the answer to that is no, but we don't have to worry about it, because if they're never working more than 40 hours a week, we're never going to owe them overtime anyway. So if my normal pay would be $800 a week, but I'm working half time and you're paying me $400 a week, yeah, that's going to be fine. And the only time you'd have to worry about it would be is if in some week I actually worked 50 hours.
Okay, we have one follow-up question to the H-1B employee that you just answered.
Sure.
What if the H-1B employee doesn't want to pay in?
Well, they don't have a choice. I mean, if you have a duty to withhold it for all your employees, whether they want to or not.
Okay. And one more question. Please speak to the average W-2 and 1099 employees in the 25 annual test.
I'm sorry, say that again?
It says, please speak to the average W-2 and 1099 employees in the 25 annual test.
Yeah. So on the website, there's a very good section about how to calculate your employees and what the average is. And so what it says is you can pick the year. So let's say I pick, we're coming to the end of 2019, and so I have to pick. And so I look at my employees for 2019, and that's the number I'm going to use. And it turns out that I have, 24 employees and only 10 contractors. So the contractors don't make up at least 50% of my workforce. I only count those 24 employees, and I'm locked in for the year for 2020. And I don't even have to pay because I'm under 25. But let's go to the next year. So, but during 2020, while I'm not paying, I end up I still have my 24 employees, but now I have 30 1099s because my business has gotten bigger, so I've hired a lot more 1099s. Now at the end of 2020, I've got two issues. One is I have more contractors than employees, so they make up more than 50% of my workforce. So now I'm counting all of them. So now I'm at 30 plus 24, or 54 employees, and I'm locked in for the year 2021 at that number. Even if I have a downturn in my business and I lay off a lot of those folks, I'm still then going to be paying into the system. So it explains it well on the website, but you're gonna pick a point in time and you're going to lock in for the year, and you're going to live with that number whether it's beneficial to you or against you.
And those are all the questions that we have.
Great. Well, thanks everybody for your time, and thanks to CIP Group for having me on, and hope everybody has a great day, and good luck. And I hope you learned something. I hope some of these questions were helpful, and that you can go back and look at your policies and make sure you're not falling for any of the traps for the unwary employer. Thanks very much.